You are connected to Talking Africa, the podcast that gets behind the headlines, brought to you by the Africa Report magazine. My name is Nick Norbrook, and we have a special discount on subscriptions. Please head to theafricareport.com and sign up to our newsletter for more. This week, we talk financial technology with the co-founder of one of Nigeria's growing body of fintech companies, the newly rebranded Carbon, formerly Pay Later. It's the start of an occasional series on finance and fintech that we will be releasing over the next few months, so stay tuned. Ngozi Dozie was an associate at JP Morgan, and he also worked at Arthur Andersen, just like Sasha Poninek, co-founder of another big startup you may have heard of, Jumia. More about them in a moment. Dozie launched a consumer finance firm called One Credit, the root of his current company, nearly a decade ago, and things have been moving fast this year. In March, they raised $5 million, then acquired Amplify, a payment startup in Nigeria, and then rebranded to Carbon. Here's Ngozi with more.
So Carbon is basically a digital bank without a digital banking license, but that's in the process. And our aspirations are to be a Pan-African digital platform, very much in the likes of Revolut or Monzo. So that literally is targeted at key economic cities in Africa, serving Africans on the continent and offshore. So really, and that's why we chose the name Carbon. We want to be as present and as fundamental to our customers as carbon is to human life. It's
right.
everywhere. It's very flexible, etc.
Sure.
And so those are the goals.
My basic chemistry, reminds me there are, I think, 4 attachment points on a carbon molecule.
Correct. They are. But then it's you've got carbon and graphite, very malleable, carbon, diamond. So
So you want to be cross-border, that's your goal?
Cross-border, so cross-border, but also very flexible in the products we offer. So right now, it's loans, it's savings, it's credit reports, but it could very well be health insurance. Basically, whatever our customer needs in different situs, we want to be able to provide for it.
And would you subcontract those products? So, for example, would you go to an insurance specialist and say, "Hey, our customers need X, Y, Z"?
Yeah, absolutely. I mean, so there's a limited number of things that we can do with some expertise. Everything else we'll partner, we'll outsource, and that's a big part of our strategy is to actually link up with other parts of the ecosystem. Right. And provide, whether it's FX, whether it's health insurance, whether it's life insurance, just link up with other parties that are experts at that particular field, so that we provide best execution to our customers.
So have you started operations yet?
Yeah, so we're 7 years old. We started off in Nigeria as a lending only institution. Yeah. And since then,
under a different name.
Yeah. So we've gone through a few changes. So we're regulated in Nigeria. Regulated entity is called One Finance.
One Finance.
So we did just lending via sales agents for about 4 or 5 years. In 2016, with the advent of a unique ID system in the financial system in Nigeria, higher smartphone penetration, we launched a mobile app called Pay Later. Which was the first in the market to give loans digitally. And so it was a 5-minute process. You download an app from the Play Store, key in your details, fill out the form, and then within 5 minutes we'd send money to your bank account if you were approved for a loan. So Pay Later has morphed into what is Carbon now, with inclusion of bill payments, funds transfer, as a wallet. You get free in-app credit reports. You can send money peer-to-peer to different bank accounts. We did a soft launch in Ghana about a year ago to test the market. That went well, so we'll be launching in Ghana this year, and probably 1 or 2 other countries. And it'll be the key economic powerhouses, whether it's Egypt, potentially Kenya, etc. We're still negotiating with other parties right now.
So, I mean, what is quite fascinating is just the amount of fintech companies who have emerged from, I guess from the Aba area, but Lagos in particular, Paga, Paystack, Flutterwave, Lydia, Cellulant, obviously that's a
Kenya-Nigeria collaboration.
But Interswitch, Carbon. Now there are a lot of Nigerians, we're always being reminded, but there probably aren't that many with a bank account who you would want to target, I suspect. And if there are 10 companies fighting for those, that competition must be absolutely brutal.
So I mean, to give numbers to it, there are 40 million in Nigeria individuals that have been biometrically registered by the central bank. So that is what we call a bank verification number. And there are approximately 100 million adults. So there are 60 million out there who we believe are looking for banking services, not necessarily banking accounts. So there are 2 points. First of all, we believe that the 40 million are, they're underserved. There are many services that have not been provided or not been provided, in an optimal fashion by the existing players. That's one thing. The huge opportunity, though, is the 60 million that need services and for whatever reason, whether they've been put off by the banks, don't like the service or feel that they've been excluded. A huge opportunity there for them. And they all use various services, whether it's a susu in the local areas where they're using an agent to save up, or in small peer groups. But our view is that the market is so nascent. 2 years ago, I think there were only about 2 3 million Nigerians that took a loan from a formal financial institution in Nigeria. So even if you just look at the 40 million, it's less than 10% that have actually been served. So whilst there are a lot of players, I think the opportunity is so much bigger, and quite frankly, there should be more players. But I think the obstacles to growth, certainly from our perspective, are capital, people and technology awareness, and then probably most critically, there's a lack of collaboration in the system that you see elsewhere that I think is critical for us to all meet the needs of the 100 million adults and beyond.
Jumia raised eyebrows in their filing when it was revealed that all their developers were in Portugal, and they said there were no developers in Africa.
Right.
Where are your developers?
So we have about 20 in Nigeria and 3 in the UK. So this is it's an interesting discussion. Over the last 5 years, you've had with the few big companies, the Jumias, the Congas, pushing development in Nigeria, you've had an awakening of the Nigerian developer where, especially with the advent of Andela, really focusing on the talent in Nigeria and Kenya and other markets. You have an interesting situation where the many Nigerian developers are actually freelancing right now because of their ability to go on freelance portals, get jobs offshore, or them even just seeing that, so my skills are good enough for the likes of Google or eBay via Andela. So you also, so it's not so much that the developers are not there; they're definitely there. They may not be accessible to many Nigerian startups because they've been priced out of the market because they hope to get foreign payments, which is much higher than what they'll get locally. There's also a lot of recruitment by European companies of developers. And so the honest truth is that if a Nigerian developer is being offered what we believe
dollars
in
or
carbon,
naira.
It's not just dollars or naira. It's actually dollars and a chance to go and live in Amsterdam versus carbons. What we fully what we think is a great salary. It's hard to compete.
So you're working with B-list developers?
No. So what we're doing is we're looking at training developers from an early age. So we're getting developers.
The Barcelona model.
Yeah, it is. I mean, I'm a developer and data scientist. So we just finished a a remote data science internship where we trained about 200 data scientists, all remote. And we're going to hire 10, so offers will be put out to 7. I think that's the model that works, and so it touches on the discussion of brain drain, and my view is that despite the issues we have in Nigeria with education and employment, people are poaching Nigerians, and let's supply the world. Let's actually build the infrastructure to train as many as we need, and also so that we can supply others. So that's the approach we're taking.
Right. It's a super interesting debate. The other thing that I thought when that whole is Jumia African story broke was it is an incredibly valid debate, and a lot of people say, look, all of the money currently invested in African tech is actually Silicon Valley money. It's German money,
Correct.
It's French,
Absolutely.
English money. So they're the ones reaping the benefit. I think, and that is an interesting discussion, and maybe it is in the second wave that local finance gets a foothold. But we can come back to that discussion.
Right.
But the other thing I thought, the next people who have to raise money and say, hey, we're an African tech company, Jumia's done them a huge service by having a successful launch on the New York Stock Exchange. Because suddenly, African tech is on a much bigger map than it was before. You're about to raise money. Have you found it easier as a result?
So we haven't had that discussion, but I do agree with you. I mean, when that discussion was raging, my view was, it's a red herring. If you're a African entrepreneur, you should be kneeling down and praying every day that Jumia is a success, on the stock exchange and over the next few years. Because it's one of the tangible success stories that is it's had the most impact. I think just on the first day they're over 50% on the New York Stock Exchange. That's the story you want to hear. You want to take that Jumia IPO prospectus, take the growth numbers there and say yes, and this will apply to my business as well.
Exactly.
That's so we are, whether they're African, Nigerian, German, I don't care. That is something that everyone should be rooting for.
Absolutely.
Yeah.
So you are about to raise money?
Yes, we're raising money. So right now we've raised about 30 million to date in equity and debt, 10 million equity, 3 million convertible debt. And we're looking to raise about 20 million in equity and debt probably about 50 million. I mean, the opportunity for debt is huge. So we're in the process right now. We were waiting for the rebrand. Now the rebrand's done. We'll get on the road right now.
With hopefully the Jumia halo effect as wind in your sails.
Absolutely. we'll take it and use it.
What about the sort of the headwinds? Because, for example, MTN is listing.
Yes.
And they have got themselves a mobile money license.
Yes.
As well. So suddenly you have one of Africa's genuine, Tyrannosaurus Rex class companies who are entering the mobile money space in Nigeria. And whereas maybe the Flutterwaves and the Lydias, etc., they're just your normal peer group. This is a different bracket. How are you going to deal with that?
So the license is the payment service bank. And so interestingly, it doesn't allow the license owner to lend. So from a service perspective, they can hold deposits, transfer money, etc. So for us, we think it's actually an opportunity. So we think the real competition will be to the large commercial banks who, for a long time, their retail model has been take money from the retail depositors and then lend it to the corporate customers or put it in treasury bills and get 15% arbitrage. We think those are the ones who are losing sleep. For us, it's an opportunity because it allows us, there's an opportunity to partner with whether it's MTN, Airtel, I think Paga's applying for a license as well, to actually partner with these individuals and say, okay, you can help bring a lot of the underserved, financially excluded into the formal financial institution, in the formal financial system,